I'd like to begin by talking about the differences between the traditional world we're used to and crypto assets. And the list of differences is long, but I'm going to highlight two here. In the traditional world, it requires trust. And we often don't think about it in this way. But when you deposit money with a bank, then you trust that they're going to keep your money safe. You trust that they have the right amount of capital for the operations. You trust that when you want the money back, you'll get it back, et cetera, et cetera. There's a lot of trust involved. And simultaneously, this space is often regulated. And that's probably why it goes hand in hand, why people are willing to trust this space. Now, conversely, the crypto space is trustless. And what this means is that as someone in this space, you can take direct peace of mind without having to trust anyone that, in fact, the coins or tokens are indeed in your possession, that the transactions will happen. So it's a trustless space, or requires much less trust. And currently, by and large, it's unregulated. And so this, of course, has numerous implications, which we'll go through now. So the first thing is that while being trustless might sound like a great feature, it requires a lot of work. It requires people who want to interact in the space to increase their knowledge and skills. These are not the normal skills that you already have interacting with a bank account or a unit trust, etc. And these skills specifically can be broken down into execution, so how to actually buy and sell coins. Even people who are very conversant in buying and selling shares, for example, actually need additional skills to deal with coins and tokens. The other thing is self-custody. So self-custody is actually taking ownership of the coins off of exchanges or whatever platform it's on. And this actually requires its own skill set. And it's estimated that about 20% of all Bitcoin that has been issued to date has been lost by people mismanaging the coins that are in their care. You have the concept of a private key, and that's what you need to keep safe. And if you lose it, then there is no forgot password and you can just recover it. It's lost forever. And this is a staggering value in the case of the estimate of 2.2 trillion rand. It just seems to be lost forever. And then there's a lot of risk mitigation around that, such as succession. So in the event of someone dying, how do their heirs actually inherit this? What's the process? Are their heirs skilled in actually managing cryptocurrencies, etc.? So it involves in setting up systems and processes that may not be in an investor's life. And then they need to keep maintaining that on an ongoing basis. They need to keep updating their knowledge and so on. And while it is the case that people can build up these systems and processes and knowledge in their life, it requires quite a bit of work and it requires quite a bit of time. And many people, they have full-time jobs. Their full-time job is not to manage money like it's ours. And so they don't have the time to actually build up all these systems and processes to manage just one aspect of their portfolio. The other aspect we touched on is about it being unregulated. And because it's unregulated, you see a lot of innovative products in crypto. However, it also means that one needs to do a lot of research. An investor needs to rely on themselves, and they need to make sure that they understand how the coins and so on work, that they believe in the coins, that there aren't any security issues with those coins, and so on. And that's because investors don't have any recourse to a regulator who they can complain to, and who will then force the bank or someone to make things better. But this has other real implications, which is that many investors, they turn to their trusted financial advisors. And currently, they find that they can't get advice or intermediary services because crypto assets fall outside of this net that the advisors operate in. Now, for advisors, what they're experiencing is that more and more clients have a desire to allocate into cryptocurrencies, either because they believe the amazing technology story, or for whatever reason, they've just seen the amazing growth and so on. And even if advisors don't have a desire to allocate a portion of their clients, the clients are demanding it. But as we know, currently, there's no license category for crypto assets for advisors. And also, advisors don't necessarily want to take custody of these assets on behalf of the clients. The clients don't know how to, the advisors don't want to take that risk on. And so more often than not, advisors are turning away this business, even though it should form an essential part of a client's portfolio as a growing technology. And they just have to deny their clients that it's appropriate for that opportunity to have access to this growing technology. Now, financial institutions and corporations, they also find themselves finding it difficult to interact in this space. And we talked about some of it earlier, because it requires a unique set of execution skills. It involves the management of private keys. This is kind of the information that allows you to control the coins in your wallet. As you can imagine, for a financial institution, they can't just give the private key with 10 million Rand worth of Bitcoin in there to their CFO and say, please look after it. And there aren't systems and processes around how to actually manage that within a corporation or institution. Furthermore, normally when companies or institutions are dealing with their financial service providers, they have authority frameworks where, for example, a transaction of a certain size requires 2 people to sign. And then if it's a bit higher, it requires a manager to sign off. And if it's a higher value, it requires board approval, for example. And also when dealing with financial institutions, often the financial institutions take on some of the burden of preventing fraud. If there's a suspicious activity going on, they will freeze the account, or they will make contact with the CFO or the financial director and actually clear the transaction. And finally, once these institutions and companies have invested, they don't know how to value these investments. And they don't know how to account for it and put it on their balance sheet, etc. Now, the task of building these systems and processes is not impossible. There are companies that have done it out there. They've published, it's open knowledge, they've published it, the most famous being MicroStrategy, how to do this. But not every company or financial institution wants to invest all that time and effort and build up all of that expertise because they have other work to do. The company will focus on its main business, and they might think that this is a good place to hold their assets, the excess cash they're not using, for example. Or a financial institution may think a 5% allocation is adequate, and they don't necessarily want to build up a whole bunch of systems and processes when 95% of the allocation is in the traditional world. So in summary, what this leads to is that there are amazing products, there's amazing technology. I'm not going to talk about that now, but very happy to talk about it if you guys want to set up time and we can chat about what the technologies and what the uses are and how exciting it is. There's all these great products, but it's a very difficult user interface in general. There's no doubt that in the coming years, the user technology will become better and better. And one day when we do transactions on the blockchain, we won't even know there's a blockchain behind it. We'll just be doing it on an app and it'll all be happening behind the scenes. But that's not what the case is right now. It also doesn't plug into the systems and processes that companies and institutions have. And if someone wants to overcome these hurdles, there's a huge time demand, and they don't necessarily have the time to build up the systems and processes. And when they go to their trusted advisors, the trusted advisors find that they does not fall within the current framework, and they can't actually advise on it. And so we identified that what was needed was a traditional interface to allow individuals, companies, institutions to access this asset class. So how does it work? Jaltech has 3 different cryptocurrency notes that are being issued. The one note provides exposure to Bitcoin. The one note provides exposure to Ether. And then the one note provides exposure to an index of coins. And I'll talk about what's inside the index of coins. But how the note works, to take an example of the Bitcoin note, today, if someone invests 100,000 Rand into the Bitcoin note, Bitcoin's price itself goes up 50, and then they cash out the note, then they will get 150,000 Rand less the transaction fees. Now, investors get 1 to 3 days liquidity during business hours. So the maximum turnaround is 3 days. However, if there's a lot of redemptions at once, this could be a bit longer. The minimum investment size is 10,000 Rand. And what we've done behind this is we've built up all of these systems and processes that we've been talking about. We have professional execution skills to buy the crypto assets at their best possible prices across numerous exchanges while still respecting ex-con rules. And also, we've built up institutional grade custody services. This is keeping the cryptocurrency safe. We've built up all the systems and processes. We employ the best technology, and we built up an institutional grade level of security on our custody services. And this is all happening behind the scenes. For when subscribing for the note, you don't need to worry about it. You get it all packaged in with the note. A bit about the index. So what the index offers is it's made up of the largest coins and tokens by their market capitalization. And it includes tokens above $2.5 billion. Now, we take this universe of tokens, which is quite a large universe, and we start subtracting out tokens that don't qualify. The first set of tokens that don't qualify are stable coins. Stable coins are coins that aim to keep their value steady, usually pegged to the dollar. And it is totally useless to include that in an index because it has no prospects of growth. We then look at historical metrics, and we remove any coins that don't have trading volumes over a certain period of time, so that in the crypto space, which is often very volatile, we don't end up including a coin that suddenly shoots up in value, gets included in the index, and then drops in value. So we want the coin to have stayed at this high market capitalization for a period of time and to have enough liquidity and marketability. We also add in security metrics. So security metrics have two areas. One is, are there any areas of concern around certain coins? And secondly, is there enough available information? If there's not enough available information, there may be no areas of concern, but that's because there's no information. And this includes how decentralized is the protocol. It includes how tested the programs have been, the protocols have been, etc. So coins that don't meet this are also removed from the index. And then we do a minimum level of diversification. Bitcoin and Ether are by far the biggest coins. And if we just kept it by market capitalization, there would be the diversification benefit would be reduced. So we cap the maximum that any coin can be to 30%. Bitcoin and Ether are at that cap, and then it's split amongst a few other coins. Currently, 7 coins make up the index. This index is rebalanced either quarterly, once a quarter, or if there are large moves and the index is too out of kilter with the market capitalization because there's been big moves, or if there's an emergency, if new exploits are discovered, if something has gone wrong with one of the protocols, then we, in an emergency, rebalance the index, either rebalance that coin out or change the weightings appropriately. Now, the benefits of an index is that it provides investors with exposure to the entire sector, the amazing technology, the promise of that technology, without having to pick winners. A good analogy is trying to pick the winners of the internet in the 1990s. It would have been difficult to pick between Google and Yahoo back then. However, by picking an index, as something starts to prove itself, it makes its way into the index and it keeps getting a bigger and bigger allocation. As something does less well, it gets rebalanced out of the index. And so what this results in is giving investors to exposure to the entire sector without the risks associated with picking single winners. To speak about the current breakdown, so there's of course Bitcoin, and Bitcoin is seen as digital gold. It's seen as very robust money because there's a fixed issuance policy, unlike with governments that can print money. And historically, it's been the most secure. It's been around the longest, and it's still seen as the most secure protocol. Ether, however, provides something a bit different. It's the second biggest by market capitalization. It's got the most applications written on it. It's got the largest developer adoption. Developers are all the time making new applications that work on the Ethereum network. And a lot of the promising technologies that are being built on blockchain are being built on the Ethereum chain because the whole ecosystem is built out there. There's something called decentralized finance, or DeFi for short, something called NFTs, or non-fungible tokens, et cetera. So there are numerous tokens with numerous applications. Most of these are being built out on Ether. They're being tested out on Ether. And all of this drives demand for Ether when people build all these applications. Then there are a couple of other chains. So these are different blockchains to Bitcoin and Ethereum. The two that currently have large market capitalizations are Cardano and Polkadot. These are alternative challenger chains, and they have various technological benefits over Ether, or advertised benefits. They claim to be able to do more transactions or faster, or have offsetting between transactions and other new features. They are potentially gaining adoption, and hence their market cap has increased. However, they don't yet have the dominance that Ether does. And they don't yet have the developer interest and so on. However, it may be the case that in the future we use multiple chains for different things. And so Cardano and Polkadot currently are these challenger chains. A bit about two of the other coins in the indices, in the index, Uniswap and Aave. So these are fintech protocols that have been built out on Ethereum, and they're being built out on other chains now as well. And they are decentralized finance. And what this means is that there is no centralized institution that is managing this. It's code that works on the Ethereum chain, and it works in an automated way. Even if all the stuff of Uniswap and Aave disappeared, it would just keep working. And this is some of the very exciting technology. Uniswap is an exchange. So it's a bit like the JSE, where you can buy and sell shares. On Uniswap, you can exchange one token or coin for another token or coin. And it works, and it's an automated exchange, and it does very high volumes. I think in April of this year, it did bigger volumes than Coinbase, which was listed recently. And it's totally automated and totally decentralized. And Aave is a lending protocol. So people can deposit money, or they can borrow money from Aave with collateral. Again, it's totally automated, and it's totally decentralized. And so what this means is that even in very turbulent market conditions, these things just continue on because they're automated. They're just code that run on the system. And then finally, Chainlink. Chainlink is also a bit of a fintech application. It's also decentralized, or you can see it as blockchain support technology. And Chainlink takes information that's not on the blockchain, and it brings it onto the blockchain, because often these decentralized finance contracts and so on, they need that information. So these are the current. Of course, as new technologies prove themselves out, as they build up the history that's required, and they prove out their security credentials, then they'll get added to the index. The index is not going to stay like this. So we talk about the first regulated cryptocurrency investment, and what are we actually talking about here? So because the framework relating to cryptocurrency investments hasn't yet been built out, we've adopted other frameworks that provide regulation and protections. So the first thing is that the company issuing these notes is a public company. It isn't a listed company, but it's a public company, which means that it has to have high levels of transparency, high levels of accountability. It has to have an annual general meeting, has to have audited financials, et cetera, et cetera. Incidentally, our auditors are BDO, and they're providing that level of governance and controls, et cetera, to look at the numbers that are produced. Also, investing into these notes is a public offer. And this means that we had to lodge a prospectus with SIPC, again, adding layers of control and protection. That SIPC prospectus was approved. On top of that, we're building an independent controlled board, such that, just to add layers of governance, to make sure that it's always the investor's best interests that are put first. Now, one of the major challenges with having an unregulated investment is that the professional phased regulated sales channel is being unused and undertapped. And this means that the very people who are qualified to do this research, to interrogate whether these products are good products, etc., that their skills are not being used. So what we've done is we've created this asset as a debenture, and a debenture is just considered unsecured debt. But what this allows is that it allows it to fall inside one of the existing phase license categories. And we have a legal opinion that confirms that this instrument does indeed fall within these phase license categories. There's two potential categories. One is the parent category called securities and investments, and the other is the subcategory debentures. to be clear, you can have either. You don't need to have both. If you have either of these, you can then, as an advisor, you can then advise on this investment. This will, of course, allow investors now rely on their trusted experts they've spent years building up relationships with. Now, this needs to be said that advisors should have a working knowledge of the underlying cryptocurrencies. If you just understand how debentures work, but you don't understand how the cryptocurrencies work, as an advisor, you should actually upskill yourself before selling or advising or intermediating this product, because that is the underlying exposure. So a lot of people might be wondering at this point, why don't I just go direct? Why would we go via the Jaltech node? So speaking to some of the points earlier, in summary, we have the professional execution by an experienced qualified crypto trader. We have the absolute convenience of not having to build this up, all the skills, processes, systems, time, etc. Institutional grade security. Estate planning. If an investor is to pass away, then the executor of the estate can deal directly with us, and we will inform the executor and the heirs of the estate where we have that information. It is in a regulated wrapper now, providing that additional peace of mind. And this packaged diversification. So it's just one investment. If you go into the large cap note, it's just one investment, and it's automatically rebalanced on an ongoing basis. So this provides know-how, peace of mind, and ease of use all in one package. Probably what could be the most exciting for a number of investors is that SARS has provided the tax treatment. So SARS has provided the following guidance, and this has been untested in court and so on. It's just guidance. So in SARS's CGT guide, it was mentioned, given their extreme volatility, cryptocurrencies are likely to be held as a speculative asset of a revenue nature. So what this means is that as an investor, if one sells cryptocurrencies at a profit, then even if they were held for capital reasons, you don't get taxed at CGT, you get taxed at income tax rates. However, with the debenture, like with any other asset in the traditional world, if an investor meets the requirements, so they were holding it for the long term, they weren't planning to trade it, etc., it does qualify for CGT treatment. And so any investor that believes in the space, that wants to hold assets for 5 to 10 years, etc., the benefit to them is up to 27%. And that's subject to these tax rates not changing in that time. It could be even bigger. Obviously, it could be smaller. But currently, it's 27%, which is 45% top tax rate minus the top CGT rate of 18%. And so that provides a gain directly over holding the asset directly. So cryptocurrencies are often controversial. Many people debate often about, is Bitcoin really money? Will it replace real money, etc., inflation, so on? Is the technology good? Relatively few people know about the technology. How a regulator is going to get involved with it. And a lot of that involves making estimates about the future. So if you ignore any statements about the future, one statement that is true is that cryptocurrencies have this asymmetric payoff profile. And what do I mean by asymmetric? So what I mean is that the maximum loss that someone can incur is only what they put in. If they invest 100 Rand, they can only lose 100 Rand. So it's 100% of their allocation. However, the maximum gain they can get is truly uncapped. It can be 2,000%, it can be even more. I mean, we've seen gains like this already in the cryptocurrency space. And unlike some traditional security, you can't have 2,000%. You can't have 2,000% on Amazon, for example, because Amazon's such a big company. How can it grow 2,000%? But in cryptocurrency spaces, those kind of gains are possible. So you have this truly asymmetric payoff profile. We've got some numbers to demonstrate it. So looking at a really small allocation. So if you have a portfolio that has no allocation, and over a 5-year period, it grows to 146 Rand. However, if only 2% of the portfolio was allocated into cryptocurrencies, and that went to zero, not to any value, that went to zero, over 4 years, it comes to 143 Rand. So the difference is negligible. And you can see the bottom 2 lines in this graph, the difference is negligible. However, if it does 20x, which is conservative based on the past performance, that portfolio goes to 185 Rand. So you have this scenario where it could come to be your biggest investment in the portfolio, but it's a truly small allocation and hardly affects the portfolio if it does indeed go to zero. And so this is a really good argument to invest in cryptocurrencies, no matter what one thinks about its prospects from a technology or money point of view. On that note, we'll take any questions or any comments.
Gaurav, thanks. If you wouldn't mind just unsharing your screen, and what I've done in the meantime is I've just I've just accumulated a couple of the questions, and I'll ask them to you, and let's see if you can answer them. So Solana and Luna Terra, will they be included in the future?
So I think it's a great question. What we need these assets to do, and there's a few others as well that are currently under observation from us, is we need them to build up a bigger history of trading and for more information to come out. And Solana is actually a great example. Solana has been on our observation list, and I think it was just last night, the Solana network went down, and the Solana developers reset the network. The same attack was done on the Ethereum network simultaneously, and Ethereum just shook it off. So that's why we have to make sure that these things prove themselves out. Investors may see a coin that's rocketing and think to themselves, why isn't that an index? Why am I not getting exposure to it? But it's because it hasn't yet proven itself out. It needs to have a bit of time and build up those volumes, etc., and prove its security credentials before it gets added to the index.
Okay, great. As you speak, I'm going to just try and add more and more questions, because I see there's a host of questions coming through. Regarding XRP or Ripple, is the SEC issue the reason why it hasn't been added to the basket?
That's exactly right. That's exactly why it hasn't been added. And on that note, the Binance coin also hasn't been added for that reason. It has issues in numerous jurisdictions, and the fate of the coin is too tied to the fate of the company. The fate of the chain is too tied to the fate of the company or the group, and hence it hasn't been included.
Okay. Next question: how often would we be one, rebalancing, and secondly, be considering additional coins?
So we consider additional coins quarterly, and that's also when we rebalance. A lot of our metrics are measured quarterly. So not only would we need it to beat the market cap of $2.5 billion, but we need to beat our volume metrics, etc., over that period, our liquidity metrics and so on, consistently over that entire period. And so for new coins to be added, that happens quarterly. In normal situations, we will rebalance quarterly. But we do have two situations where we will rebalance more often. One is if the weightings of the coins inside our index start to move too far away from the weightings in the index. We have some certain thresholds, and if it crosses those thresholds, then we do a mid-quarter rebalance. Also, there's some kind of emergency situation. If, for example, Solana was part of the index and we were unaware of this fact that actually it could be hit by a DDoS attack, that was the attack, then we might, as an emergency, say we need to rebalance this out. So emergency situations, new facts, we will rebalance more often than quarterly.
Okay, there's another question which I'll answer is, it's a public company. Is it an RF company? And the answer is yes. The next question, Gaurav, I can answer this, is can you invest in a trust? If so, is there an advantage or disadvantage? Do you want to answer that?
Why don't you go for it, Janti?
Yeah, you can absolutely invest as a trust. I think one thing you need to consider is the tax position of a trust. Obviously, as an individual, it's 18%. I think a trust is 36% capital gains tax. So you may want to weigh in from a tax position perspective, but obviously I think get advice in that regard. Another question, Gaurav, which is a tough question, we debated internally, is why a debenture over shares?
So it was an intentional reason, and you're right, Janti, we spent a lot of time debating it. The reason that we went with a debenture instead of shares is that the public company, if the security was shares, then the public company, it would have certain gains from the movement in the coins, and then would pay tax before paying dividends out. As a debenture, we get to maintain our tax neutrality. This is because the assets are moving up and down, and the liability of the debenture is moving in line. And so when there's a gain and potentially a taxable event from that, simultaneously, there's also an increased liability. We owe that money to our debenture holders. And so the entity becomes totally tax neutral, and it's the investors that have to pay tax. And this is beneficial for some investors because they don't pay tax, for example, some pension funds and so on, etc. So we wanted to maintain the tax neutrality of the entity.
Okay, the next question isn't really product specific or investment specific, but someone's asking, what's the expected investment horizon? In other words, how long should they be holding for?
So I'll separate this into two parts. So the one part is this investment itself is indefinite. However, as an investor, you have liquidity in that if and when you want liquidity on a business day, you submit a redemption, a corresponding amount of coins is sold, and those proceeds are then given to you minus any fees. So that liquidity period, depending on the size and the number of, etc., the number of redemptions that come in at once, can be anywhere between 1 to 3 days, and if it becomes truly large, up to 5 days. So people have liquidity, and so the investment term then is really up to the investor. Now, speaking about the industry as a whole, and this I can't give you financial advice, but the industry as a whole and blockchain, it's very volatile. And so if someone invests money they're going to need tomorrow, it might be down. And so that might be a bad idea. However, holding it in the long run, there's a much higher chance that it's up. Even if it's having a down day, if it's many years in the future, the down day might be higher than the price you came in at. And so really, I think the investment horizon is longer, or if someone is very risk seeking and does want to do a short investment and willing to take that risk, then so be it.
Thanks, Gaurav. Another question around minimum investment. So that's 10,000 Rand. Anil Governor asked a question. Would you mind explaining succession and security and debenture pricing and debit orders? Can you give us some clarity on that?
Sure. So I'll try and remember all of those. And just if I miss them, please remind me, Jonty. So I guess let me start with succession and security. So I guess as succession, the way that we solve this issue is that because it's inside a normal asset of unlisted debt, this just forms part of that person's estate. And why this is better than hold it directly, I'd mentioned it's better than hold it directly, is that someone might have coins sitting on a USB and it's in their desk drawer and no one knows that they've got 5 million Rand worth of coins in there. And so in this way, as soon as the executive of the estate becomes aware, or we will keep sending statements out, and we'll soon become aware that there's an asset that belongs to this investor that's now passed away, and it'll get put into the estate, whereas a USB stick might just be lost forever. And so that's why the succession is better, and that's how it would work. With respect to security, so on the security side, it's always a tricky topic to talk about because on the one hand, we want to give investors peace of mind about how security works, but the more we reveal, the more it becomes a security threat. People know how our security works; they can try and get in. So what I can say to you is we've taken the best processes in the world. There are numerous that have been published out there. We've taken the best processes in the world. We've implemented them, and we've taken the best technology in the world. There are a handful of technology providers that are used by the biggest hedge funds, the biggest exchanges, etc. out there. They have more than $1 trillion of assets on the platform. And we did an intense due diligence on numerous and picked one, and they passed our due diligence process. And so from a security point of view, it's truly institutional grade. This is what the hedge funds and pension funds, etc., all around the world, this is the processes and technology that their custody providers are using. So that was two of them, Jonty. Sorry, what were the other parts of the question?
How will the debenture pricing work, and this in relation to debit orders?
Perfect. So again, a bit of a complicated explanation. In essence, what happens is the debentures, each debenture is for a certain quantity of coins. They come in 1,000 Rand units initially, but the very next moment, because it's so volatile, with 1,000 Rand, if we buy 0.0001 of a coin, then the very next minute, if the price has gone up, it's no longer worth 1,000 Rand, it's worth then the debenture is going to cost them 1,050. So each debenture is linked to a certain quantity of coins. Thereafter, when people come in, initially it'll be set at 1,000, but when people come in thereafter, the price will be volatile. When they come in, that'll be the price. So how this will work from a debit order point of view is that someone will set the maximum debit order that they're comfortable with. Let's say it's 5,000. And then at that point, we will look at the maximum number of whole debentures that we can give them that is below that amount. So if debentures at that point are 1,100 Rand, 4 debentures is 4,400, 5 is 5,500. So we can't do 5. So we'll then do a debit order of 4,400 and we'll add 4 debentures to their portfolio.
Great, Gaurav, thanks. A couple of other questions I'll answer. A number of people are asking what our fees are. So our fees for to be issued and on issue and on redemption, it's 0.5%, and we charge an annual fee of 2%. And then there's a rebalancing fee. This fee is 1%, but only on the portion that needs to be rebalanced. So for example, currently 30% is weighted in favor of Bitcoin. If that goes to 40%, we'll need to rebalance down back to 30% at some point in time. The 10% that's gone up, that'll attract a 1%. So it's not on the entire, not on the entire fund. It's only a very small portion of the fund. Do we stake coins? We don't stake coins. Just trying to keep up. Will we be providing a class of business training for advisors? Absolutely. So if you go onto our website, under webinars, you'll be able to register for one of our upcoming webinars. I think we have one next week, Wednesday. You can register for that. We'll also be providing advisors with additional material if they need to do an extensive due diligence. We can make that available, but absolutely, and I think it's critical for everyone to really understand what they're investing in. How do you invest? Simply go onto our website, jaltech.co.za, and then navigate to our cryptocurrency note. And at the bottom of the page, you will see our application form, and you can complete that and submit it to us, and we'll take you through the investment process. There are so many questions coming through. What I will do is I will send all attendees our brochure and some information, and I think I'll include the application form. You'll have my details, and if you have any questions, I think drop me a mail or schedule a meeting, and we'll be sure to address them. But I just don't think we'll get through every single question. Thanks everyone for their time. Gaurav, well done on answering some of those really, really tough questions. And yeah, we'll keep everyone informed in the developments of the investment. Thank you very much for your time. Thank you, Gaurav.